Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, December 8th, 2010. Well, folks, here we go again. The market is trading mixed again on the day. Dow Jones Industrial Average down 6 points. NASDAQ is up 5, and the S&P 500 up about 1.5. So a mixed day on Wall Street again. This is what we see day in, day out as the Federal Reserve continues to put a bottom underneath this market. Remember, the Fed's game is clear. Keep the markets up, continue to slowly add to the gains, make sure overall that the markets do not fall, so the average American is out spending hard-earned money, creating a circle or merry-go-round in the overall economy, stimulating it. And that's really what it is all about, folks. Make the average person feel richer, so they're spending. Now, a couple of things to go over. First of all, you did have a little bit of an early fall in the markets. We came all the way down, perfectly kissing the 200 moving average right here. Again, I called the low of the day in the intraday stock chat and gave that long based on the 200 moving average. And I said that might be the low of the day. Sure enough, so far it is, as we've moved beautifully off of it. The spiders, again, are up 10 cents. S&P barely positive, but just slightly positive on the day. Now, a couple things to go over here. I have a lot of little stock tips and stock ideas to throw out there today because there are some things moving. We have some good biotech action going on. And again, some of the stocks that I've talked about on the biotech side are continuing to make a move up. But we'll get to those shortly. First, what I want to just discuss here, again, a flattish market. You had a nice little reversal day yesterday. We talked about the metal play, how the metals reversed. There was so much hype going back to Monday and over the weekend. Again, Tuesday, a big reversal after a gap up. And after that, it was all history. The metals have continued to sell off today, although they are off their lows. But take a look at the GLD early. From the gap up yesterday on the GLD, this was astounding. Basically, 139.50 gap up yesterday. Today, the low was 134. That's a $5 and change drop on the GLD. Again, we had called for that on the gap up, a beautiful reversal. And again, since then you have a little bear flag forming, but it's just a movement off the lows. Volume has really died out at this point. Now the SLV, folks, SLV is same general thing. Look at the size of this reversal. From $30 yesterday to a low of $27.40 today. That is a huge, huge reversal. And since then, again, you've chopped sideways and continue to do so. All right, so again, the metal plays have stopped falling, and I think that's why the markets have stabilized. In addition, if you take a look at the dollar chart, here's your dollar chart. The dollar chart is kind of in the lower range. This is the high area today. And again, you can see you're off those highs. That's keeping the markets basically on the flat line. The dollar is basically slightly positive for the day. All right, so again, neutral to positive dollar with light volume. Volume today, by the way, is extremely light. Take a look at the SPY. This morning we had okay volume on the fall, and then as soon as the fall stopped and the Fed supported, the volume has just gone to sleep right here, which again gives us that neutral upside bias. And again, folks, for basically the last the last 2+ weeks I've had a neutral to upside bias for this market, really since before Thanksgiving, and it's been dead on. And the reason is you just have to understand the game here. The game is the Federal Reserve trying to prop the markets up. It always comes full circle back to that. Always remember that, and that's what you're going to look for to really take advantage of as we continue to have that bias in the foreseeable future, and it's a perfect one. Yesterday the markets ended flat. Today they're flat again. Again, neutral to upside is the way you want to look at it, unless something happens in Europe. Catastrophe happens in Europe, another default out of Spain or Portugal, well then obviously the dollar is going to rally sharply and the markets will fall. But overall the markets will be basically supported by the Federal Reserve. Now, a couple stocks to go over here. I want to just talk about OREX. OREX getting a panel vote in favor of FDA approval. They haven't gotten FDA approval yet, but it's a panel vote that favors it, and it's likely to happen. The stock is basically up just under 100%, was up over 100, has come off the highs. But I've been talking up the biotechs to my members in the research center, and that's really the key here, folks. You have to remember this is where it all comes down to. You have to find the plays before they start to move. I, again, have alerted my research center members on certain stocks. I will go over a couple of them here, but the biotech stocks, especially the small cap biotechs, are the ones that have not had big moves yet. All right? That's really the key. So I love finding these plays because these are the next ones to run. I'll tell you a couple of them. My favorites, and we'll first talk about sympathy plays. OREX, or Exogen Therapeutics. The sympathy play today was VVUS. That's up $1.21. That doesn't have a drug that's been approved or been voted on, but it just is one in that same field of diet drugs. All right, in addition, ARNA also up nicely, although off the highs of the day, up nicely here as well. Other stocks that are starting to move today, biotechs. Take a look at SPEX, SPEX. Look at this move. All right, so basically already up 12 cents to 74 cents here. Good volume surge here as well. Take a look at the daily low end of the chart. I love that chart. Low end of the chart starting to rip higher. That's a good one that's moving as well. Again, I think that's moved too much already to be a buy, but some of the lower ones like PARD, this is one of my favorites, folks. If you zoom out on this chart, take a look at where it used to be, trading at $10, right now at 44 cents. And look at this, it's starting to pop up a little bit. It looks like it could continue to make a move, and that is one of my favorites there as well, at least to the 50. You'd figure it'd go to the 50 moving average, which was 50 cents, 49 cents, possibly even more if it really starts to get going, but definitely one of my favorites. Also, SOMX is another one of my favorites here. I like the low end of the chart here. You can see good consolidation base forming right down here, and it's holding it up, and now it's moved off and it started to consolidate. If this can get above the 20, it should go to the 50 moving average as well. SOMX is the symbol on that one. That's a very nice one as well. There are a bunch of other ones as well. I mean, there's a bunch, but the bottom line is, here's another one. I'll throw this one out to you guys. THLD. At low end of the chart, if you zoom out, you can see that chart. These are just, a lot of them are just trading at or under cash value. For instance, PARD, let me put that chart up again. PARD is trading under cash value, so it kind of tells me at least that there's, at least in the immediate term, there's not an amazing amount of risk since it is trading below cash value. All right, SOMX has a lot of promising things in the pipeline as well. I mean, there's a bunch of these that I think, to me, are somewhere in the range of where I'm looking to possibly pick them up, or I have picked them up. PARD, SOMX, I do have small positions in those that I'm playing around with at this point. Just kind of watching. And again, it looks like this is the hot area. I told my members about PARD in the high 30 level, high 30 cent level, and it's now at 44 cents. Probably still has another nice upside move, I would think. SOMX we've talked about in the low 280s, right around this level as well. Specs is now up 13 cents or 21%. They're just going crazy, and this is where you always want to find them ahead of time. And this is why the research center is second to none, is because my job is to go find them and alert them, my research center guys, to these plays prior to them moving. And then that's what we try to do. It's always being on the cutting edge. Remember, ahead of the hype, not behind the hype, not following the hype. And I made that very clear in the video yesterday, is you don't want to be a follower. When the media is pumping gold and silver and it's already up ridiculous amounts, if you take a look at the daily SLV chart, when it's all the way up here and it's getting pumped and it's gapping up, that's not the time to buy. That's the time to short. Now look at the pullback. Now, in the opposite scene, you want to find the plays that are at their lows that haven't started to move yet, that are now starting to get some money flow. And that's what, again, we do in this research center. You want to join that because you're going to get those type of plays. You're going to be on the cutting edge of trades and be, again, making money instead of giving it away to the market. All right. Other than that, folks, let's go back to the SPY. Just touch on it. Up 11 cents. We're really not going anywhere. Market very quiet in the afternoon session. I expect it will remain that way for the immediate future unless we get some sort of weird event or dollar move. But overall, you anticipate a flattish market again today, just like yesterday, just like pretty much the last few days after we had that big run up on the Dow. Dow up last week about 400, 350 points. All right, but again, you go into that neutral bias. Again, I still think we could have a little bit more upside in this market into the Christmas season as the Fed wants to make sure this market continues to move neutral to higher to get people continuing to spend. Remember, spending, Americans see their 401ks go up and up and up, which they have over the last 3 months. They feel better about spending. They spend more money, charge more things on credit cards. That money goes into the retailers. That gets hiring going in the retailers, spending going, and continues to move that merry-go-round around. And that's really, again, what it's all about, folks. All right? Again, enough said. Come join the intraday stock chat. Come join the chat room. We will see you at inthemoneystocks.com. Take care.